banks are able to defer mortgage repayments for up to 6 months, and to do that without impacting a customer's credit record. So you will have a monthly credit report that is identical to what you would have if you were making the payments. Businesses are effectively automatically eligible for these deferrals. And when we say business, it includes sole traders. If they are a business that has total borrowings of up to $10 million, and they provide a self-assessment to the bank that their business has been impacted financially by COVID-19. No further verification is required from business customers. They effectively just have to declare to the bank that their business has been adversely impacted. So the $10 million cutoff accounts for 98% of all Australian businesses that have a loan with an Australian bank. The deferrals apply to both the principal and interest repayments. The interest that is not being paid in this 6 months will be capitalised, and it can then be paid off either over the life of the existing loan, or time can be added at the end of the loan. At a more general level, banks are very conscious that the 6-month period may need to be reassessed with APRA. There may be some businesses that just need a little bit longer on those loan repayment holidays. Now, we're still having those conversations with the regulator, but we're very conscious that not everybody's going to be, in the same place at that 6-month cutoff. Where banks offer a deferral of loan repayments to commercial landlords, those landlords must provide a declaration that they will not evict tenants or terminate leases as a result of rent arrears caused by COVID-19 for those tenants. And I think that's an important one. Banks felt strongly that if they were offering relief to landlords, then the small businesses that are housed in those properties should also get some benefit. So the government announced, I think around about the 30th of March, they would be putting in place a government guaranteed SME loan scheme. And what they're doing is providing a 50% guarantee on new unsecured loans issued by those banks and financial institutions that are signed up to the scheme. With a government guarantee of 50% of the loan, it does a couple of things. Firstly, it means that business loans can be offered at a much cheaper rate, and they're being offered by most institutions at around half the previous business lending rate, somewhere around the 4.5%. It also means that banks can take on higher risk borrowers, remembering that this is for new unsecured credit. So it does mean that banks can go a bit further up the risk curve than they might otherwise be able to do under their prudential requirements. The loan has to have no repayments for the first 6 months, and it is a 3-year loan term. The government will guarantee up to $20 billion. So that means that that unleashes $40 billion worth of lending. SMEs, which includes both sole traders and not-for-profits, are those, and this is the government's definition, they have to be businesses with a turnover of up to 50 million. So, you have to be less than 50 million turnover. The loans are up to $250,000 per borrower. There's no minimum loan size, and the loan can be taken in tranches. So you might think, for example, that you need $100,000 and you take that in May. In August, you may feel that that was not enough and you need to increase that. You can keep increasing it up to $250,000. Where you take the loan as part of an overdraft, any part of a loan that is not used at the end of the period can be returned without fees or interest. Banks are also in a position to provide a kind of, sort of bridging finance, if you like, either through that SME loan guarantee or through another existing facility that the customer might have, such as an extension to an overdraft. But I do want to stress that there are lots of other things that banks can do to assist. There are areas that apply to some sectors of the business community, particularly in relation to merchant fees. While there is no automatic package on this, there are a number of banks who are offering merchant fee reductions or waiver periods on merchant fees and other charges. They can offer interest-free periods or no interest rate increases. They can do debt consolidation, where people might have a number of facilities, including a credit card, a personal loan, a mortgage, and a business loan. And as I said, the loan deferrals for commercial landlords, which we hope does provide some small businesses with rent relief through their landlord. I really want to end with the message that the sooner people speak to their bank, even if they just think or worry that they might be in financial difficulties in a few months' time, the better and sooner the bank will be able to help. Banks have put in place individualised, dedicated hotline numbers. So if people are looking for credit to get them through to JobKeeper payments, there is dedicated hotlines. Right now, people need their banks to be their partners, and people who are worried, people who don't, even if you're just confused or don't know what might be available, talk to your bank as early as you possibly can. There are very few crises that don't have opportunities in them to come back and do things differently and better and to innovate. I think we've all been forced to innovate in the last, 6 to 8 weeks. And in many industries, we've seen, the telehealth's a great example. 10 years of disruption done in 4 weeks. That's a kind of writ large example, but there'll be very few businesses, because necessity has forced them to operate differently to get revenue, that can become a completely different business model. So, I think that's what organisations need leaders to do, is to be looking around the corner and identifying those opportunities, keeping their people, as close and part of a team as they can, and making sure you've got the resources to do what you need to do. And that's about talking to your bank.